All right, welcome back to the channel. So, Ethereum delivered the move we prepared for to start the week. We entered a long position at $1,870 and closed at $1,908 for a 52.65% return. So, the story began before the entry when we established a direction where we were willing to trade, the location where the setup made sense, and the condition price had to satisfy before we committed capital. That preparation is what turned our market forecast into a profitable execution. And it is the same process we are carrying into the overnight session in Tuesday's options trading plan. At the start of the week, we were not looking at Ethereum and simply deciding that it had to go higher. The larger chart was recovering, but recovery alone was not enough. A directional opinion tells us what we prefer. It does not tell us where to enter, when to enter, or where the idea stops making sense. Our preparation separated those decisions. First, the higher time frame structure had to support a continued recovery. Second, the price needed to return to an area where the remaining upside was still larger than the risk required to participate. Third, the intraday structure had to stop deteriorating and begin confirming that the buyers were actually defending the area. Okay, so now we've gone over our profits from Monday, but let's take a broader look and see what to expect coming after Monday's move. So now we have to update the map because the setup at $1,870 is not the same setup at $1,905. On the daily chart, Ethereum has recovered from the late June low near $1,550 and pushed into the $1,900 area. That keeps the larger recovery constructive. The next higher time frame checkpoints are $1,927, $1,952, and $1,977. The hourly and 30-minute charts are still holding the broader advance, but the latest push stalled beneath roughly $1,916 to $1,917. On the 15 and 5-minute charts, they're still kind of cooling, but after reaching the $1,916 area, Ethereum began producing lower highs and pulling back toward 1900. That creates a different executional context from Monday's entry. At $1,870, the market was offering location before expansion near $1,905. Price is sitting between support and resistance after the expansion has already occurred. The larger trend may still be constructive, but that does not automatically make the current price an optimal entry point. So the next entry has to be earned again. The level that organizes that decision overnight is $1,900. So the overnight Asian execution map. Let's take a look at it. So crypto trades continuously, but participation changes as the major financial centers come along. Tokyo opens at 8 p.m. New York time during the summer. Hong Kong continuous session begins at 9:30 p.m. Those first hours help establish the Asian range, the high and low that's a later session can defend, break, or sweep. Uh, for the constructive scenario, Asia needs to hold $1,900 or briefly trade beneath it and reclaim it. A wick below 1,900 is not enough to invalidate the recovery. The important question is whether Ethereum can recover the level and begin closing it above $1,900. The first recovery checkpoint is $1,912. The more important continuation barrier is going to be $1,916 to $1,917. You're looking for closes of candles in this area and above this area. So on the 15-minute close above $1,917, followed by a pullback that holds. will bring about $1,924 to $1,927 into focus. And that's kind of where we are right now. For a bullish options thesis, that sequence offers the cleaner optimal entry point. Support is defended, momentum returns, and the next upside checkpoint remains available. The second possibility is an unresolved range between $1,900 even and $1,917. That is not a failed forecast, it is a waiting environment. So we need to look out for that particular area. So let's see what to look out for the London handoff. So London's going to open at 3 a.m. New York time while Hong Kong is still active. That makes the handoff one of the most important overnight windows. The first thing to watch is whether London respects the range Asia created or sweeps one of its own towards one of the edges. A liquidity sweep is a brief move beyond a obvious high or low, often where stocks and breakout orders are concentrated, followed by a move back inside the previous range. If London pushes below the Asia low and beneath 1,900, then quickly reclaims the level, the bullish setup can rebuild. If London breaks 1,900 and attempts to recover it and fails, the executional context changes. The first downside zone becomes $1,894 to $1,888. Beneath that, then we can start looking at $1,876. Um, and then, on a 30-minute chart with a loss of, the price dipping down to $1,876, that will weaken the larger recovery enough to expose even potentially down to $1,850 or the $1,864 range. For a bearish options thesis, the first break is not the strongest evidence. The failed reclaim is what confirms that the former support is beginning to act as resistance. So that level is going to attract attention, while the reaction is going to determine whether we need to execute or not. Okay, so let's recap the three potential paths overnight and what to do when we start to see them. So, path number one is a bullish continuation. Ethereum holds $1,900 or it sweeps and then reclaims it, then recovers all the way up to $1,912 and closes above $1,917. If that occurs, that sequence is going to open up 1,924, 1,927. And if we hold 1,927, it's going to become support on the hourly chart. So we can close at an hourly candle above that range. 1,952 becomes the next larger checkpoint. The bullish optimal entry point is not simply price above $1,900. It's in the full sequence of us defending $1,900 as support, recoverable, continued momentum, and confirmed continuation. So the second path to look out for is if Ethereum remains trapped between 1,900 and 1,917 dollars. In that environment, you're going to need to be patient. Direction remains unresolved, time is passing, and neither side has produced a qualified entry. So quite frankly, we just need to stand pat if we stay in a range between $1,900 and $1,917. It's a no trade zone. The third scenario is going to be a bearish failure. So if Ethereum closes below $1,900 and it attempts to reclaim above that range and forms a lower high underneath the level, that sequence is going to shift the map toward $1,894 and $1,888, potentially followed by $1,876. The bearish optimal entry point is not the first red candle beneath the support of 1900. It is the market proving that the support has failed and cannot be recovered. One scheduled U.S. checkpoint also matters. The Bureau of Labor and Statistics has state employment and unemployment data and its quarterly, usually weekly earnings release scheduled for 10 a.m. Eastern on Tuesday. Those releases arrive during the London New York overlap. If Ethereum produces a sudden 10 a.m. candle, let the first reaction settle before treating it as a clean technical confirmation. So we're going to go ahead and start to wrap things up though. But um, Monday's profitable trade came from a complete execution sequence. We prepared the directional thesis. We identified the location where the opportunity and the risk were properly balanced. We waited for confirmation, then we executed at the ranges that we needed to get a 52% profit. Now the market is offering a new decision, not the same entry at a higher price. Overnight, 1900 is going to be our pivot point. Above it, buyers still have a path through 1927. Below it, with a failed reclaim, the lower support ladder begins to open. That is the options trading optimal entry point. Preparation creates the map, price supplies the confirmation, and execution follows only when the two agree. I hope this breakdown helps you all be profitable within your trades. Continue to follow our videos, like and subscribe. To the next video.